Well, Lorne Steinberg is our featured guest today. He says the dominance of large cap technology stocks is leading many great companies elsewhere in the world, in particular, to be ignored by investors. Some of his top European and UK picks. We're joined by Lorne again. Well, this is an offshoot of the Magnificent Seven story, correct?
It's an offshoot as well, Paul. Just, historically, 25 years ago, the U.S. was 30% of the Morgan Stanley World Index.
Right.
Today, it's 70% of the Morgan Stanley World Index. But U.S. GDP, as a percentage of that globe, has not grown that significantly versus everybody else. And the fact is there are a lot of large U.S., UK, and British listed stocks with big market caps and huge U.S. presences that people don't even know about.
And you think investors should know about them?
Absolutely, because they're trading at a steep discount to where they'd be trading if they were listed on the New York Stock Exchange.
So let's talk about a couple of them. One of them is Compass Group, listed in London.
No one's heard of Compass Group. It's a $50 billion market cap company. It is one of the largest, probably the largest food service company in the world. They service everything from food courts to hospitals, prisons, stadiums for U.S., NFL football, et cetera. Double-digit revenue growth, 15% EPS growth, great A-lit credit rating, really sound business model with tons of M&A opportunity. It's a very fragmented industry. And, we look for this company to deliver probably 50% gains for investors in the next few years.
Is there a history of the market seeing value in non-US listed stocks and the stocks rallying as a result?
Of course, because this is the history of the world. When things are going up, everybody rides that wave, and then when things are going down, everybody ignores them, and usually buying that which has not performed well, if the companies are still performing well, is the way to invest.
Okay, another one is a Universal Music Group, a better known company, but I guess not listed in the US, correct?
Correct. And Bill Ackman actually is one of the largest shareholders. He owns 20% of the company. Not that that's either good or bad. I'm not going to make a comment. But listen, they are the dominant player in music. They own everybody from Taylor Swift to Drake, so Canadian content, and Beatles, et cetera.
What exactly do they own? The publishing rights?
They own the publishing rights. Right. So the artist has the other half of that. So when you see people like Dylan selling their publishing rights, Universal owns it. Just gives you an idea of how much that value is worth to Universal. This is a high operating leverage business. So Universal's revenues are growing at 10% a year, but we expect their earnings to grow at about 15% per year. And music is a huge growth industry, and it is just not being appreciated by the markets.
And where does that one trade? That's not an LSE listed stock. I'm not familiar with that.
Right, so that trades in Europe on that's one of the European stock exchanges.
Okay. And third one we're going to talk about is a company called Reckitt on the London Stock Exchange.
Right, another $50 billion market cap company. Everybody knows Lysol wipes, Clearasil, et cetera. That is Reckitt. 60% of their revenues are actually in the U.S., but it trades at about a 25% discount to people like, companies like Procter & Gamble, et cetera. Yet it's got better growth in P&G and most of the rest of the sector. 3.5% dividend yield, share buybacks about to start, and again, just compelling value for $50 billion market cap companies.
You make the point that a couple of, I think all three of these companies would have substantial exposure to the U.S. economy. How should investors think about these? Are these foreign stocks as such, or are they global stocks?
These are global stocks, and so the U.S. is the largest economy in the world, and you buy Reckitt, it's like buying P&G. P&G has roughly the same revenue breakdown, and so if they were listed in the U.S., they'd be getting a lot more attention.
Right.